Hey, what's going on, everybody? So, today I want to talk about reverse splits. Now, if you've never heard about a reverse split is basically when you have a stock or an ETF, you hold it, and the price has been trending down. So, um, the company decides that they want to do a reverse split. Now, to try to simplify it, I just was talking to ChatGPT about it. Basically, what it says here, and for this example, we're going to do a 1-for-10 reverse split. So for every 10 old shares, you get one new share. The price per share becomes 10 times higher. Now, I think there's lots of different ways they can do these reverse splits, but we're going to just use this example of a 1-for-10. So let's say before the split, your trading price of the ETF you had was $2. You had 1,000 shares for a total value of $2,000. Now, in this example, your new share price is $20 and you have 100 shares and your total value is still $2,000, right? So nothing really changes as far as your value of what you own because it's just getting consolidated. However, you have less shares, right? So dividends per share will be recalculated based on the new price, right? So um, if the ETF paid 10 cents per share before the split and they have a 1-for-10 split, it should pay about $1 per new share. So everything is just getting rebalanced and recalculated. So you're not technically losing money here. But what I will say, and this isn't financial advice, this is just me kind of thinking out loud and looking at what's been going on with some funds. We're going to look at some examples here in a second. But if this keeps happening, like if this keeps on happening and you're not reinvesting to grow your shares, I would think that eventually those shares would keep getting split and split and split, and you wouldn't really have any shares left at some point in the future, possibly. Um, so this is just an example, guys. Like I said, just ask ChatGPT to kind of simplify how a reverse split would look, a 1-for-10. Now, the reason I'm using 1-for-10 is because Yieldmax has filed for 1-for-10 reverse splits for all of these following, excuse me, all of these following ETFs: Alti, Tesla, Nvidia, Coin, all of the ones that you guys see here, Coney. And they've also got some 1-for-5 reverse splits on the Bitcoin option, the Yieldmax options, Airbnb, and Orc. So, and this website kind of breaks it down simply as well. 1-for-10 split, every 10 shares you own becomes one share at 10 times the price. And then a 1-for-5, same thing with 5 shares becoming one share at 5 times the price. Your total investment value doesn't change. If you owned $1,000 worth before the split, you still own $1,000 worth after. You just have less shares at a higher price. So again, why are they doing this? I think the reason why they do this is that, kind of outlines it here. The market perception, low share prices create negative optics, institutional requirements. Some institutional investors have minimum price requirements. So I want to look at a few examples here. And one of the ones that Yieldmax, a very popular Yieldmax ETF, Alti, trading right now for under $4, right? But if you guys look year to date, it was around $9. And then all time, we've trended from close to $20 down to under $4. So I think once you're getting into those, I mean, I've heard in interviews fund managers talking about $10, less than $10, you starting to get into risky territory. I don't know if that's still the case. Maybe it's less. Alti's been under $10 for since the beginning of the year. So, but one other ETF I wanted to look at here is MSTE from Harvest, and this one's been getting a ton of attention because this ETF actually is down 63% since inception, and I think it came out about $15, and it's always been over 10. I mean, even I think it's spent some time, close to $20 per share. However, if you look at year to date, it's down 63%, and over the last 6 months is down 70%. MSTE trading under $6. And what's the threshold for a reverse split? How would that impact you? Personally, I don't exactly know what the threshold is or what like a fund provider like Harvest would set that at for an ETF like MSTE. But one thing I will show you guys here is I was looking at the distributions from Harvest, and MSTE for next month is paying out a dividend of 35 cents per unit. Now, if we look at their dividend history here, so when it first came out, it was paying 66, so from 60 to 66, and then back down to 60, and then to 55, then to 45, and now, like I said, guys, they're paying 35 cents per share for dividend. Now, obviously, this chart's you got to take into consideration with this chart the dividend history. You're getting those big, large payouts, right? So it's not just about the chart. But the thing with the chart is that if you're looking for a reverse split territory, that's maybe something just to consider, right? Total return, this chart here doesn't show total return because obviously MSTE is paying out those huge distributions. And how does this affect a fund like HHIS? Well, personally, I like HHIS. And if you look at HHIS, year to date, it's almost flat. But 6 months, it's up over 6.5%. So one thing I've noticed with HHIS, and this is why personally, my opinion is to stay in a diversified fund or a diversified ETF, is because they have all their holdings here, and I think they can kind of dial up or dial down certain stocks within the portfolio. So right now, MicroStrategy, the MSTE, is under 4%. So like Costco, they have a higher holding in Costco. They have a higher holding in Meta. They have a higher holding in Amazon, right? So I don't know if they're doing that to prevent the share price getting dragged down, or maybe it's just because of the volatility or performance. I'm not sure. I'm not expert stock picker, which is why I try not to go for single stock funds, because I just don't know. But you look at the distribution history of HHIS, and it's increased and it's increased, and then you look at the distribution history of MSTE. Let's find MSTE. And then, like I showed you guys, 35 cents per unit with original distributions of 60 cents and then 66. So it's almost been cut in half when you look at the dividend. The dividend's almost been cut in half. And then the share price of MSTE year to date, over 60% down. Now, is there still upside potentially? Sure. You go with a single stock or a single stock ETF and you go higher risk, higher reward. I'm not an expert on MicroStrategy or what they're doing, but I'm just using this as an example, guys, of going in on one fund. I know a lot of people put a lot of money into MSTE and it was doing really, really well for quite a while. But then to take such a huge, hard swing down like this has kind of got a lot of people wondering, right? So personally for me, that's why I stay with a diversified ETF like HHIS, still getting exposure to MSTE and those other volatile stocks, but then you're staying diversified within a fund, which is what I personally like. So to sum it all up, guys, reverse splits, you see Yieldmax going ahead with those reverse splits on all of these ETFs, one for fives and one for tens. And just to use, again, Alti as an example, it's one of their most popular ETFs. So Alti is trading for about $4 per share, and they're going to be doing a reverse split, one for 10. And then MSTE is trading for $5.50. So it's really not that far off. It's well under that $10, and it's trending down towards a $5 price range. So could we see a reverse split? I don't know. I don't want to make any predictions, but just putting it out there because Yieldmax now, they've done a few reverse splits already, and we've got more coming with these really high yield products. I don't think it's completely out of the question that it might happen. But anyways, guys, I hope you have a great weekend out there, and leave me a like, leave me a comment. I'll see you guys in the next video.